2014-15. He is well known to all of us. He is a very dynamic president. He hails from the IT capital of India, Bangalore. He also son-in-law of the soil. Sir, I have completed my CA in 1998. When I have completed my CA, first time I have met you at Bangalore campus. I am very much impressed with your presentation. I am in touch with you on those days itself. Sir, still you are having the same dynamism. Sir, still we recollect the SIRC seminar hosted by Bangalore branch during your tenure as a SIRC chairman. The very good arrangement, sir. Anil, sir, is a well-known faculty for taxation of capital gain, shares and all those things. He is a very young faculty. Apart from taxation, he is a regular speaker in GST also. He has taken several seminars and lectures on various professional topics, interest and professional topics. Apart from academics, he is very active in cultural activities also. When we have thought of a seminar on this aspect, our treasurer Jagan Mohan Rao suggested Anil Garu, and immediately when we called him, he has accepted. We thank Raghu Garu and Anil Garu for accepting our invitation and coming to the seminar. In spite of your all busy activities, so now we are on in third wave of Corona. As per the media reports, this is the first phase of the third wave. As per the recent reports, many of the elders are getting neuro problems in this wave, and similarly, now more and more kids are also being affected. Yesterday, I came to know that 11 years kids are affected with Corona. Members, please be cautious. Please take care of your health and your family's health. Please see that appropriate insurance is there for you, and it is active and it is readily available whenever there is an urgency. Members, I assure you that the speaker is going to deal the entire subject from scratch, that is from the contract notes to the end of the filing of the return. Sir, please take as much time as you require, sir. There is no time limit. All our members are very eagerly looking to hear your presentation. I also congratulate Nellore branch chairman Sujit Kumar Jain and Nellore branch secretary Arun Kumar for accepting our invitation and coming as a special invitees. Apart from Nellore branch chairman and secretary, their members have also joined in this meeting. I thank Nellore branch members also. Dear members, please pose as many questions for interactive session so that all members will be get good idea and knowledge about the subject. With these few words, now I request CA K. Rohini to present the biodata of today's chief guest, CK Raghu Garu. Jai Hind, Jai Aise. Thank you.
Committees of work to you all. First of all, I'd like to thank our management committee of Ongole for conducting this. This is very helping to us in getting more knowledge. Thanks again. About Garu, he is born and brought up in St. George College of Commerce, University of Bangalore, and elected as a president of the Institute of Chartered Accountants of India for the year 2014-15. He is a fellow member of the ICAI with the more than 24 years of professional standing, honorary member of Certified Public Accountants of Australia, senior partner of K. Raghu and Co., a leading firm of chartered accountants in Bangalore, specialized in taxation, audit, business, investment, and technology consulting services. He is elected as the president of the Institute of Chartered Accountants of India by 22nd Central Council on 12th February 2014 for the year 2014-15, and elected as a Vice President of the Institute of the Chartered Accountants of India by the Central Council on 12th February 2015. The Central Council of the ICAI from 2002 terms. Directors, Board of Indian Overseas Bank, nominated by the Ministry of Finance as an independent director. Former board member of the International Federation of Accountants of New York, a member of Audit Committee of the International Federation of Accountants for 2015, and chairman of the CSR Committee of the Institute of Chartered Accountants of India. He held the positions in 2014 and 15 internationally as a technical advisor for the board of International Federation of Accountants, New York, a member of the board of the Confederation of Asia and Pacific Accountants, chairman of the Committee on Education, uh, technical advisor on the board of SAFA, technical advisor to Professional Consultancy Organization Development Committee of IFAC, member of the South Asian Federation of Accountants Assembly, member of the Membership Development Committee of XBRL International, member of the New York chapter of the chapter of the Institute of Chartered Accountants of India, and nationally he hold many positions as a member of the board of the Insurance Regulatory and Development Authority, a member of the National Advisory Committee of Accounting Standards by the Ministry of the Corporate Affairs, Government of India, member of the High Level Steering Committee for the implementation of XBRL based data submissions by bank, member of the working group constituted by the Ministry of Corporate Affairs in the areas of corporate governance, corporate social responsibility, and other aspects for the corporate affairs. And he is a member of the task force in the Ministry of Corporate Affairs in regard to the plan budget of ministry for the 12th 5-year plan. He is member of the Advisory Committee on Mutual Funds of Security and Exchange Board of India, and SEBI. And he is a member of the MCA 21 Stakeholders Committee constituted by the Ministry of Corporate Affairs for ensuring continuous improvements in service delivery under MCA 21. Member of the Technical Committee on Budget and Accounting Standards for Urban Local Bodies constituted by the Ministry of Urban Development. He is a member of the Qualified Quality Review Board, an independent audit regulatory for the public interest entities. Member of the Regional Monitoring Committee of MBFCs in Karnataka. Member of the working group constituted by the Reserve Bank of India for addressing implementation issues and formulation of operational guidelines in the context of IFRS convergence for the banks and NBFCs in India. And he was a member of the RBI working group to review the norms for the implementation norms for empanelment of statutory auditors in public sector bank, member of the audit advisory board constituted by the office of the controller and the audit general of India, chairman of XBRL India, member of the Government Accounting Standards Advisory Board for Union and States constituted by the CNAG, member of the India UK, that is Indo UK Task Force on Corporate Affairs constituted by the Ministry of Corporate Affairs, and member of the Task Force of the Department of Public Enterprises to provide professional and technical support to the DPE in the process of finalization of MOU department documents. A member of the Insurance Advisory Committee constituted by the Insurance Regulatory Department Authority IRDA, member of the governing body of the National Institute of Public Finance and Policy. These are all the positions he held in 2014 and 15. Sir, Raghu gar, by knowing all the above, sir, we understood that you are enhancing the name and fame of the various institutes, accounting bodies, including our ICAI, nationally and internationally by providing your service. Thank you, sir. Today we got an opportunity to get a session with you. Thank you, sir. Once again, handing over to you, sir. Thank you.
Thank you. Thank you, Rohini, for having introduced me in a very detailed fashion. Of course, most of the profile what you have read is what the positions I've held. But today, if you ask me what is my role, I am back to the profession like all of you, working full time in office, then focusing more time on my health, focusing more time on family. These are the three new things which I've added to my profile, I could say. I'm consciously trying to see that because of the pandemic, because of the lockdown, I'm able to spend more time with the family, more time on doing yoga, exercises, everything. Of course, my life was extremely hectic when I was in the council. I used to travel a lot to many countries. To within the country, we used to crisscross the whole country, and life was very hectic. And because you are representing on so many international bodies and you're representing the institute at various regulatory forums, life has been very hectic. But I can say now life is very comfortable. I'm quite happy, and I'm very happy to be a part of this evening program. When Rajendra Prasad called me up and invited me, to come to this program, I readily accepted invitation because I still remember having visited Rajendra Prasad and his father, Mr. Subbarao, I think, when way back when I visited Ongole for the first time. And in fact, I'm very happy to know that our senior member from Ongole, Mr. Bala, is also joined us on the webinar today. Bala sir is my father's very good friend. I know him from many years, and I still remember during my first visit to Ongole, I stayed in. I wanted to stay in a hotel. Mr. Bala refused and said, "No, Mr. Raghu, you're not staying in a hotel. You're staying at me." I have enjoyed the hospitality at his home. A very hospitable person. Very nice to meet you, Bala, online. I'm sure all the members of Ongole branch would be happy to have a mentor like Mr. Bala in the branch. The kind of efforts what they have put in to create this branch. Rajendra Prasad, I think you've been doing an excellent job as a chairman of the branch. In spite of the pandemic, you're conducting online programs. You're trying to get the best speakers across the country. One big advantage what the branches have today is that they are able to get the top speakers across the country. Today, if you want to get a good speaker from Bombay, it is not very difficult. And today, speakers are also having the time to spend to share their knowledge. So you can get a speaker from Bangalore, you can get a speaker from Delhi, you can get a speaker from Calcutta. And thanks to our good friend, Mr. Anil Bharadwaj from Bangalore, who has been accepted to speak on today's session of taxation of trading and investments in shares and mutual funds. A very relevant topic, Rajendra Prasad, you have chosen for the benefit of members, because today what is really happening is that the stock markets are booming. We find more and more investors, getting into the stock markets. And today with platforms like Zerodha available, you're able to open an online trading account so easily with all your providing all your KYC. Never it was so easy to open an online trading account and an online demat account. So everything has been streamlined, and a company like Zerodha, which is from Bangalore, is today one of the biggest players. And what I see today is that among the younger generation, especially in a city like Bangalore, I come from the capital, IT sector. A lot of youngsters, a lot of my clients are working in the software space. I find that they're investing in stocks and shares at their free time. And yes, they come to us with a lot of information, providing to us, stating that they've traded in options, they've traded in futures, some of them in derivatives. And then, there's a whole lot of work for you as a chartered accountant. So I'm very sure Mr. Anil Bharadwaj will guide all the members as to how accounting should be done, what are the various options available for taxation of short-term capital gains, then how exactly you should go about maintaining the books of accounts, in case the transactions exceed a particular threshold. It's a very relevant topic, and I'm sure all the members will be immensely benefited by this session. I'm also happy to note that the Nellore branch chairman, Sujit Kumar, and his team is also viewing the webinar. My greetings to you, Sujit Kumar, and all the managing committee members of the Ongole branch. for the excellent work you're doing for the profession. I still remember my visit to the Ongole branch when the branch was inaugurated. Extremely delighted to know the kind of activities, the kind of work the Ongole branch is doing for the members and students. I'm sure under the dynamic leadership of Rajendra Prasad, more and more good activities would be conducted for the benefit of members. I also see here Mr. Ratnam Gupta from Anandpur, another senior member who has always been working for the profession. I've been seeing him right from the time I was doing my CA. He used to visit my house to meet my father. And then Subbarao is a storehouse of information. Whenever you get any WhatsApp messages from Subbarao, I make it a point to ensure that I read it, because Subbarao doesn't send all and sundry forwards. One thing about you, Mr. Subbarao, you're sending forwards that are required for the profession, for updation. And please continue to do the good work of sharing the good knowledge amongst the members through WhatsApp. My compliments to you for sharing the knowledge, Mr. Subbarao. Friends, Rajendra Prasad has requested me to speak for about 10 minutes as to what is expected from all of us, considering that we are facing a pandemic. Yes, as Rajendra Prasad very rightly said, the COVID-19 has impacted the entire economy. All the economies around the world has been impacted. If you see the recent press reports, we see fresh waves of COVID has engulfed many Asian countries. And whether it's the, you can say the third wave or the fourth wave, but yes, all these countries which had opened up, even a country like America which opened up, now are putting some additional restrictions. So what has happened is the entire economies around the world have been impacted, and multiple lockdowns has really impacted the economies. And if you look at India, we have had 2 lockdowns, we have had 2 waves, and the second wave was very, very bad. All of us have seen how our near and dear have suffered, how many of our members have lost their children, they've lost their spouses, and it is very, very, you can say, disturbing to note that the second wave of the pandemic was very, very frightening for the profession also. But having said this, friends, I can only say that today lockdowns have been lifted. The overall business confidence was very poor, but now it's slowly improving. I only wish that we don't encounter the third wave, which is widely being said that it will come by the end of next month. I'm only praying God that we should not have a third wave, and vaccinations should increase, and more people should get vaccinated. I think it's our duty, and as a citizen of this country, to motivate people who are not vaccinated, to encourage them to go for vaccination. It could be your maids at home, it could be your gardener, it could be your drivers. So please ensure that they all are vaccinated. I think each one of us have a responsibility to see that how we help the government in countering this pandemic. Friends, considering the fact that COVID has impacted the economy, as chartered accountants, it is absolutely essential for us to understand how each of these sectors are performing, because what really happens is the client comes to you for advice. You find that he's in a sector which is vulnerable because of COVID. You might find that he's in a sector that nothing positive might happen in the next 2-3 years. So it is essential for you to sort of understand how each of these sectors are performing. So I will just quickly take you through a few sectors that have been impacted very badly. If you look at the manufacturing sector, what is being said that earlier China was a global manufacturing hub. 28% of the total global manufacturing output was being manufactured by China, but slowly a lot of companies are moving away from China, and India is being looked at a preferred destination thanks to the proactive initiatives of the government. We find a lot of investments are happening in India, and then we also have competition from neighboring countries where investments are flowing into Singapore, Indonesia. A lot of other countries are also getting investments in the manufacturing space. So manufacturing space is something which will grow, and I would suggest that it's essential for us as chartered accountants to understand as how this manufacturing sector would continue to grow in the years to come. Then coming to the IT sector, coming from IT city, here the IT sector has not been impacted. All of you might be seeing the results of some of the top IT companies. Most of the companies have performed well. And today the employees are working from home. Work from home is the new normal, and many people have returned to their hometowns and they're working from their hometowns. So we find that the IT sector has not been impacted. But yes, all the support services like the real estate, spaces that we're occupying, the cars that were being used to provide the, ferrying the IT staff, and all the other ancillary activities have been impacted very badly in a city like Bangalore, because we found that Bangalore highly is dependent on IT companies. Unlike Tamil Nadu and Andhra, which is not dependent so much on IT companies, Karnataka, that is Bangalore, is dependent on IT companies, and all the support services for the IT companies have been impacted very badly. So as such, IT sector is doing well, and all of them are working from home, and this will continue. And going by what is happening globally, I don't see any impairment happening in the IT sector. All IT support services are the supports are the ones that are getting impacted. Coming to healthcare sector, healthcare is being doing very well thanks to COVID, whether it's pharmaceutical companies, whether it's clinical research companies, whether it's even simple things like diagnostic centers, hospitals, nursing homes have been doing extremely well. So a lot of new investments are flowing into the health sector. Government is also encouraging, a lot of providing a lot of fiscal incentives for the private sector by providing them with concessional loans for the health sector. So health sector is bound to increase. So any new investments coming in the health sector would be productive for the clients. This is something which we need to keep in mind. Aviation sector has been hit very badly because of the fact that I'm sure most of us would not have traveled over the last 1.5 years. So this has been impacted very badly. But yes, things once improves, I think aviation also would start looking up. Telecom has been benefited a lot thanks to the telecommunication bandwidths available in our country. 4G, which is available in most parts of the country. Today, we are able to speak to each other, getting connected to each other thanks to the telecom bandwidth, the data affordability that is there. People are able to have data packs and reach out to people. Business meetings are happening on Zoom. Professional meetings like this are happening on Zoom. So this, the telecommunication space would continue to grow. They're all doing well. And this is something which one should keep in mind. Insurance sector, looking at the penetration of insurance in our country, insurance, if you see, has not, we do not have a high penetration. If you go to a country like Australia, you find that the penetration is as high as 70 to 80%. Whereas if you look at India, maybe the penetration is just 2 to 3%. And very rightly, Rajendra Prasad said that if members of our profession have not taken any insurance, please ensure that you cover yourself. A lot of new initiatives have been launched by the institute. In fact, Mr. Prasanna Kumar had called me a few days back requesting that I should speak at this seminar conducted by the Ongole branch. Prasanna Kumar is the vice chairman of the committee for members in practice, been doing an excellent job. Lot of new offers are being given to the discounted offers are giving to the members for software, for hardware, for insurance products, whether it's general insurance, medical insurance. My compliments to Prasanna Kumar for the good work he's doing, and considering the fact he is from your state, I'm sure he will continue to work for the welfare of the members across the country. My compliments to you, Mr. Prasanna Kumar. So insurance sector is growing fast. If you look at the medical insurance space, today I was speaking to a few doctors known to me. They say, Mr. Raghu, many patients who were admitted for COVID have not been insured. It's a very shocking state of affairs. Even the lower middle class, upper middle class have not covered adequately insurance. In fact, the Institute of Chartered Accountants of India provides support to chartered accountants who have passed away, families of chartered accountants where CA is no more. We provide financial support to them. They come to me for getting my authorization as far as the chartered accountant in Bangalore, come to me as a past president, and I need to go through all the papers and sign. And I find that many of them have not taken insurance at all. CAs with in the age bracket of 45 to 50 to 55, I find that they've not taken insurance. This is something which all of us should keep in mind. So insurance sector will grow very fast. This is something which you need to keep in mind. And this is essential for us to understand this, because the penetration of insurance is very low in our country. Coming to the agricultural sector is impacted by COVID, by the money flow reducing in the entire economy, and we find that even sometimes the nature also is not in favor of the agriculture sector. Many states have suffered during this particular pandemic. And what is very important is why we need to understand. I've just given you a few sectors. There are many other sectors like the travel, the hospitality, they've literally closed down, you can say. Hardly any international travel is happening, domestic travel, rooms are running empty. If you go to a big 5-star hotel in Bangalore, the room occupancy is about 8 to 10%. That is a kind of hospitality that is there, that occupancy that is there. So as chartered accountants, when clients come to us and ask us what is it we need to do in this pandemic, whether we could invest in this sector, whether this is the education sector again is booming. Thanks to online education, we find a lot of investments are coming in a lot of startups in the education space. So we as chartered accountants should understand how each of the sector is performing during this pandemic, the next 3 years, 4 years, so that we're able to handle the clients. We should instill confidence in them, give a positive support to them, and try to see how we can support them in this troubled time, because they trust on us. As chartered accountants, our clients will look upon us for support, and it is our duty to motivate them, to give them a right picture, handhold them, and see that you are helping the clients in areas where they are having. Let us say a client is having a concern in he wants additional working capital. You should try to see whether you are in a position to help him. If you find that a client wants to close his business vertical, you should be in a position to study and tell him, yes sir, it's better that you close down. If you want your client, he's got surplus money, you want to invest in new sectors, what are the sectors he could invest? So proactively, you should guide your clients to take the right decisions in these troubled times. And chartered accountants being trusted advisors, I think the clients will be very happy to get our advice. Friends, I would like to conclude my welcome remarks by what is it we as practicing chartered accountants should do in the next 3 years, or let us say next 3 to 4 years. I have 10 points. I would like to tell all these 10 points to all the practicing CAs who are watching this webinar. Number one thing we need to keep in mind is that traditional areas of practice are dwindling. Filing of income tax returns, filing of GST returns, filing of TDS returns. Yes, compliance has to be done for the clients, but today we find that traditional practice is dwindling. That is because of the automation that is taking place. And we find that today clients are able to file their tax returns on their own. A lot of information is being auto-populated. So there was a time when I remember when I qualified as a chartered accountant in 1990, we used to spend a lot of time in the income tax department. My father also being a practitioner, I used to go with him during my articleship to visit the income tax department. And many a times in a week, we used to go 2 to 3 times, and most of the half days used to go. The second half of the day is when we used to go. But today, faceless assessments has come. You can do everything sitting at your office. So the entire change that has taken place in the traditional practice is something very, very impactful. So it is essential for all of us as practicing chartered accountants that traditional practice is dwindling. Your revenues from traditional practice will reduce. So you need to be aware of this change, and you should look at exploring new opportunities. Very, very important. So the second thing which you need to keep in mind is looking for new opportunities. Let us say Rajendra Prasad is practicing in Ongole in the field of taxation. He's doing bank audits, he's filing tax returns. He should look at, being a young chartered accountant, he should look at what are the new areas he could get into. Today, it is not very, very difficult for a chartered accountant in Ongole to service a client in Bangalore. Earlier, we used to have clients coming from only Ongole to your office. But today, no longer it's like that. Even if you have a client in Bangalore, you can service the client in Bangalore sitting in Ongole. Even if you have a client in Singapore, you can service the clients, from Ongole. I have seen in places like Hubli, Belgaum, Mysore, Mangalore, Gulbarga. I've traveled extensively. Lot of CAs are serving, offering services to clients situated around the world. So what I mean to say is that the second important thing what all of you need to do is look for new areas of practice. You might ask me, Mr. Raghu, can you tell me what are the new areas of practice? There are a lot of new areas of practice. Look at forensic audit. Forensic audit is gaining importance. Banks are looking at forensic auditors, but they're highly inadequate forensic auditors. Institute has launched a certification course on forensic audit. In fact, I myself during this pandemic went through this certification course, and I have to just give the final examination. But yes, this course on forensic audit conducted by the Institute is extremely good. If at all you want to develop some skill sets on forensic audit, I think you should take up this course. Insolvency is gaining ground. Many chartered accountants have already become insolvency professionals. Those of you who want to take up a career in insolvency practice would increase. And if at all you are keen to get into this space, yes, you can get into it. Cyber security. Today, what is happening? All transactions are happening on the internet. Today, you're able to buy a tie, you're able to book your air ticket, you can order for food, everything is happening online. So security is a big issue. So as chartered accountant, you should give an assurance to the company that everything is happening properly. All the products and services are being delivered rightly. The payments are right. Payments are coming to the payment gateway, and give an assurance that the entire system is secure and there cannot be any cyber attacks. I was on the board of Indian Overseas Bank for 3 years. One of the biggest challenges for a nationalized bank is the cyber threats. The server could be hacked. So we create so much of investments are made to strengthen the cyber security in a nationalized bank. So even companies today have to invest in cyber security, and chartered accountants with the knowledge of cyber risk framework can guide companies to consult in the field of cyber security. So cyber security, forensic audit, insolvency, investment banking. Investment banking is growing very fast. Let us say your clients want to disinvest, they're looking for some investment coming in. You could be an investment banker helping the clients to get their equity disinvested in their company. So please look for new opportunity. This is the mantra. And those of you who are old who feel, Mr. Raghu, now it's not the time for us to get into new areas of practice. My suggestion is look for new partners, young partners who are dynamic, capable. Take them as partners. If you're not in a position to take them as partners, you have them on specific projects working with you, and it's possible for you to offer new services with the help of young professionals with you. So all CA firms in the country have to scale up and get into new areas of practice. Number 3, business consulting is growing very fast. Most of us practice in direct taxes, indirect taxes, audit and assurance, but business consulting is one area where if at all you focus yourself, there's a lot of opportunities. Let us say Mr. Bala is having a client who is having a particular concern on a particular area, and Bala is able to offer consulting services. Definitely the client would be immensely benefited, and Bala will be able to charge a good fee to the client when he offers business consulting services. It could be anything. They might have a concern on the data, they might have a concern on the stocks, they might have concern on the limits, what they're enjoying. They might have a concern on the entire way the financial structuring has been done. If Mr. Bala can come in and be their one-stop consultant, a business consultant, I'm sure there's a good opportunity for all of us. And business consulting is growing very fast. You speak to any of the partners of Big Four and you talk to them, which are the areas they're able to generate good revenue. They all say, Mr. Raghu, as far as audit and assurance is concerned, yes, we need to have that to build a relationship with the client, but it's consulting is where a lot of money is there. So business consulting is a good area. You can decide which area of business consulting is a big umbrella. If you go to the Institute Chartered Accountants Act, business consulting has been defined. There are more than 40 to 50 areas where you can decide where you want to pitch in and offer your services. That is number 3. Number 4, upskilling. Upskilling, I already said, there's a need for each one of us to upskill ourselves. Certification course on concurrent audit is there, certification course on forensic audit, on insolvency. Then we have on the new emerging technologies like blockchain, then robotic process automation. Then we are having courses on even artificial intelligence. So because all these new technologies are impacting everyone, so you need to take up these certification courses, and these certification courses will help you to give the additional skill sets to offer. Because if you do not have the skill sets, no clients will be in a position to consult you. Number 5, invest in technology. Yes, chartered accountants have been consistently investing in technology. If you feel that you're not adequately invested, invest in technology, provide the work from home facility for the staff, provide laptops to them, ensure that they are comfortable working 24/7 from wherever they are. So you can get the benefits of these investments. Today, if you are looking at work from home, your staff should be able to access your servers. So the data should be secure. You need to invest in high quality servers. You need to invest in legal softwares. You need to invest in networking software. You need to invest in all the window platforms, etc. So there's a need for you to invest in technology. If you invest in technology, I'm sure you will be able to deliver quality services to clients, not only in Ongole, but to clients around the world. Because when you're dealing with clients around the world, you should have a very strong technology backbone. Number 6, you need to work with IT professionals and IT companies. You might tell me, Mr. Raghu, ours is a small place. We just have investment in computers, but we don't have good softwares. We don't have people to help us in technology upgradation. You need to work with IT professionals, youngsters who are good in IT, work with them, work with IT companies, find out what are the new softwares available, whether you can automate your office. Let us say a simple thing like automating your office. Have you invested in office automation software? How many returns have to be filed? You should have everything at your fingertips. Last year, we have done 60 tax audits. Last year, we have done 1,200 returns. Last year, we have filed 40 TDS returns. What is the status as of today? What is the percentage of completion? Who is doing which work? If the work, Mr. Bala has assigned the work to a person X, he needs to find out whether the person X, when did he start the work, when did he complete the work, what is the time he spent. Many a times you start looking at the time spent by each of your staff members on a particular client by the filing of tax and audit, you find that you are undercharging the client. So you need to map the time spent. Billing should be automated. So the entire workflow in the Chartered Accountant's office should be automated. So please invest in a good office automation software. Institute has recommended a few office automation software. Office automation software will help you to improve your business productivity. Then seventh one, hybrid workplace. Hybrid workplace is a new concept. In a city like Bangalore, if for some reason your staff is not able to come because they're using public transport, or if you find that because of the pandemic, someone at home is not well, they're not in a position to come, or they themselves are impacted by COVID. Today, hybrid working is permitted, where they are permitted to work from home, and flexi working also is a new concept. When I was a president, we started this. Flexi working is, let us say there's a lady who is married, got children, who is not able to get back to the profession because of our commitments at home. To empower such chartered accountant women, we started this flexi portal. So let us say Rajendra Prasad wants a resource in indirect taxes, and he finds that no one is available. But if this lady has got the knowledge of GST, if she's able to work from home, she is able to offer service or even work for half day, I think we should encourage flexi staffing. Flexi staffing means flexi hour working. That is, you make them work in your office for maybe half day. The other half day they can work from home. So hybrid working is a new thing. Please accept this. Don't believe in the concept of the staff sitting in front of you from 10 to 6. All this is changing. You need to set up a system so that even if they work from home, you're able to monitor the work that is happening. Coming to the 8th point, build new client base. Okay, fine. You've been working with a certain set of clients, and you find suddenly a certain set of clients have vanished because of the pandemic, and you find that your billing has reduced. So what do? It's absolutely essential for you to look at new clients and try to build new clients. And this is possible, if you get into new areas. For example, if you look at Bangalore, startup is a growing space. A lot of startups have come up in Bangalore where they require services of chartered accountants for accounting, payroll, compliances, audit, everything. We are able to offer 24/7 services to all the startups. I do not know in a place like Nellore. I'm sure even Nellore also will have a lot of startups, because a lot of investments are coming from America. People from Ongole who are staying in America would invest in a company in Ongole, taking some engineering graduates, and they run this company. So we can provide support services to startup, or you yourself can provide support to a client who's in Chennai, or a startup client in Chennai or Bangalore. So get into new areas of practice, get into new clients. Don't restrict yourself to the traditional client, because suddenly post-COVID, you'll realize that about 25 to 30% of your, top line would have eroded because of COVID, because these guys are not doing well. They're not in a position to pay your audit fees. Number 9, network with other CA firms. Very, very important. If you don't network with other CA firms around the country, you can't grow a practice. Let us say Anil Bharadwaj is there in Bangalore. Anil Bharadwaj should be able to network with the firm in Bombay, able to work with the firm in Chennai, so that he's able to offer his services to not only the clients in these cities, even chartered accountant firms. So you need to work with CA firms so that work can flow from them to you. Many people feel that networking is not a success. I don't believe in that. My personal experience is that networking is a success. Only thing you have to build a connect with a firm, develop that kind of confidence about your firm, your strengths in your firm. I'm sure networking would help you to grow your practice. Number 10, last thing which I would like to tell all of you is that drop unremunerated clients. Clients who are not paying you well, please drop them. Absolutely, there is nothing that you try to make your practice smart. You realize that you're charging, let us say, 10,000 rupees for a client, but when you do the mapping of the time spent, you realize that you spend more than 10,000 rupees to service the client. Such clients are not in a position to pay you also more. So wherever you find an assignment is unremunerative, it's not worth having the client, you should be smart enough to drop the clients and try to focus on bigger clients where you can provide better quality of services to the client. So friends, these are some of the 10 suggestions which I thought I should give to all the practicing CAs to upskill, to diversify, to network, to invest in technology. 10 things I've already said. I would not like to repeat, but yes, every crisis provides an opportunity. I think you will all agree with me. Generally, we take decisions, when there's a crisis in the family, you take some tough decision. Today, I'm sure all of your clients, you'll see amongst your clients, today clients are selling unwanted properties. Clients are trying to distribute the families, the properties in the family. Partitions are taking place. Clients are trying to sort of wind up their affairs because no one is sure how long they are alive. So what is happening is that in every crisis is an opportunity. You can see how best you could be a trusted advisor to your client. Even if he's an individual client where you're filing a tax return, you should be able to see whether you can advise him on, winding up his affairs, or if he's a young client, whether he can invest in a new, business, which is a growing sector. All this, I think, every crisis provides an opportunity, and it's our duty to help the clients to navigate through it's troubled times. Whether you like it or not, it's like a flooded, the street is flooded. And there's an old gentleman walking. It's our duty to handhold the gentleman and see that we are able to see him through the flooded streets like that. In troubled times, you should support and handhold your clients. And I believe that our profession has been resilient. We are having the ability, we are having the, God has given us the strength to sort of help people, help businesses, help the economy, help the nation to move forward. I think it's the duty of each and every citizen in this country to help the nation to overcome this crisis. More so professionals like us, because professionals like us, we have a lot of clients respect us, a lot of clients look upon us for advice. We should guide them and try to see how you can be useful. Even small things like doing CSR activities, I think we should get into it. As chartered accountants, we can influence people. We can influence people to contribute, donate. And if you find that, I was reading an article in Deccan Herald a few days back, where today hunger, even in the lower middle class, is very high. Many people do not have money to even, for a two-course meal. So if we as chartered accountants, if we as influencers can get involved in some CSR activity, either on our own or through some organization, we should try to see whether we can help the nation. We can help to tide over the crisis. I'm sure each one of us sitting here should ponder over all this, try to re-engineer our practice, try to be useful to society. And for whatever time we live in this world, I think we should be considered and respected to be a useful citizen. Seniors like Bala have been doing excellent work in all these areas. I'm sure with their guidance, the Ongole branch is able to take up more and more activities for the benefit of the profession, for the members, students, and the community at large. And I wish Rajendra Prasad, the young, dynamic chairman of the Ongole branch, all the best. Good luck to you, and good luck to all the members of the Ongole branch. And I'm able to see about 90 people are watching this webcast, and I'm very happy that all of you are watching. Good luck to each one of you, and I'm sure each one of you will be extremely successful in navigating through these troubled times. Thank you very much, Rajendra Prasad.
Thank you, sir. A very vibrant speech, sir. This Zoom has given a new opportunity for us to meet the stalwarts of the profession like you. Sir, on 29th January 2014, you were present for the inauguration of our foundation of our Ongole branch, sir, as a vice president. We once again thank you, sir. Sir Prasanna, sir, is the backbone of our branch. And see, you have covered the entire economy review. And apart from that, you have given 10 sessions that are very much useful for the youngsters and seniors, sir. Very informative. Sir, you have told about the importance of automation, importance of the investment in infrastructure, the new concepts like hybrid offices and flexi staff. Sir, we are already having some flexi staff on our roles. Sir, your mentorship is quite good, sir. Very, very useful for all our members. The strength also, sir, now 94. So 95. So very happy to see you, sir. We once again thank you for coming all the way, coming and addressing our members, sir. Thank you very much, sir.
Thank you. Thank you very much, and goodbye to all of you.
Prasad garu unmute cheyandi sir. Sir, now I request CA G. Arun Kumar Garu, Secretary of Nellore branch, to present the profile of the speaker to this August gathering.
Thank you, sir. It is my pleasure to see Anil Bharadwaj, sir. I won't take much time. Mr. C. Anil Bharadwaj, sir, born and brought up in Bangalore. He did his schooling in Bangalore. He did his master's in business law with the National Law School, India University. He completed his CA in the year 2016. Now he is the senior partner of Bharadwaj and Husband Chartered Accountants. He is the visiting professor of Mount Carmel College for post-graduation, ASC College for post-graduation, Seshadri Institute of Global Management Studies, Ramaya Institute of Management Studies. He is the member of Internal Quality Assurance Cell for NAAC in Vasavi Vidyaniketan College, Bangalore. He has been a resource person and keynote speaker and panelist in more than 35 national conferences conducted by various universities and colleges across Karnataka. He has given more than 100 seminars on GST till date, being an advisor for many cooperative societies on GST. Being recognized as one of the few resource persons who can explain tax provisions in Kannada language. This has helped the spread of knowledge at rural areas where English is still a foreign language. He has provided many corporate training programs on tax planning and creation of healthy portfolio to maximize the return at minimum risk. He has presented papers in many conferences on various topics of goods and service tax, stock market, demonetization, income tax. He is one of the most preferred resource person for ICAI on various topics, including program on investment awareness, wealth creation, and tax planning for investors. He has been guiding thousands of students in CA course and post-graduation courses in structuring their career. He is a stage artist and have acted in more than 25 dramas, which are presented on almost all prestigious stages in Karnataka, Mumbai, Pune, etc. He is a Gamika artist, which is an ancient art of singing the Kannada poem in appropriate rags according to its situation and feeling. He served as student union secretary in MES Paying College. He has been awarded as the most talented student award 2012 from ASC Degree College. He has been awarded as the best comedian for the 3 consecutive years by Bangalore University and Kannada and Culture Department, Government of Karnataka. He has been awarded as the best mimicry artist by Bangalore University. With this, I introduce today's speaker, C. Anil Bharadwaj, sir. I thank Ongole Branch Management Committee for this opportunity. Thank you, sir.
Thank you, Arun Garu. Now I request CA Anil Bharadwaj Garu, today's faculty, to give his presentation on the subject.
Thank you very much for the chairman of Ongole branch for giving me an opportunity to speak to a number of chartered accountants, about 96 of them joining in today's seminar. And it is privilege for me to speak on tax planning to the tax planners. So that is one of the very important thing and a privileged thing that I'm experiencing today. And I would request the chairman to kindly allow me to share my screen so that I can present the PPT as well as share some of the important knowledge with
now share
our fellow chartered accountants. Dear friends, elders, today for about 1 hour and 1.5 hours from now, we will be focusing particularly on tax planning of equity investors, derivative investors. As an investor, also as a chartered accountant, as an advisor for investors. So being chartered accountants, we should be in a position to understand the A to Z of investments as well as the advisory things on investment. My dear friends, Acharyat Padamadatte Padam Shishyaswamedhaya Padam Sabrahmacharibhya Padam Kalakramenahi is one of the most preferred Sanskrit Subhashitas, where it says, though we are all chartered accountants, we have passed the exam with great difficulties by reading a number of books and keep reading a number of books, we still get the knowledge till the last breath of our life. So that is the motivation for attending the CPE program. Today we are all here to get more knowledge, more clarity, more information on investments. The main focus on today's topic will be on tax planning. My dear friends, as the past president of ICAI, Mr. K. Raghu, a renowned person, has spoken to you for about half an hour on various avenues available for chartered accountants. Very coincidentally, one of my first slides speaks about that. The income avenues for chartered accountants not only lies in the practice, not only lies in the audit, but lies in A, B, C, D, E, F, G, H, I, and so on up to Z. What does it mean? A for audit and assurance, B for business consultancy services, C for compliance services with respect to taxation, labor, accountancy, and many other things. Data analytics is one of the greatest and new era for the chartered accountants on big data analytics and big data analysis. Equity market, by being an investor, being consultant for investors, forensic accounting audit, which our K. Raghu sir spoke. GST is one of the best area for the practice for chartered accountants. Hedging strategy consultant in terms of foreign currency transaction, in terms of investment by investment bankers and other qualified institutional investors, foreign institutional investors. For all of these people, the chartered accountants can also be an hedging strategy consultant, how to mitigate their risk. They can do that. And insolvency professional and investment banking like this, so on and so forth. If you say a chartered accountant has a practice or an income avenue starting from A up to Z, it is not an exaggeration, my dear friends. So these are all the areas where we can have, but today's my focus is on audit and assurance with respect to investors, compliance with respect to investors, equity market, how to give the consultancy for them, and hedging strategy is some of the areas that I am going to concern on today's seminar. As tax planning as an investor, as well as tax planning as a planner for an investor. So both things we have to see. In the first scenario, we have to understand types of capital asset and its duration. We have capital assets such as short-term capital asset and long-term capital asset. And we say that capital assets, a immovable property like land, building will be considered as a short-term capital asset if it is held for less than 24 months, or if it is held for more than 24 months, then it will be considered as long-term capital asset. All these things we all know, but to give you a small glimpse of what I want to tell you, I have taken all these things. Immovable property like land and building, other than land, immovable properties like land and building will be considered as long-term asset if it is held for more than 24 months. Before it was 36 months. From past 3-4 years, it is 24 months. And jewelers and jewelries and other movable assets other than land, building, equity shares, any other capital assets like jewelries, other movable assets will be considered as long-term capital asset if it is held for a period of more than 36 months from the date of acquisition. And most importantly for today's seminar, it is about equity shares, mutual funds, and other securities on which security transaction tax is paid. These securities will be considered as long-term capital asset if it is held only for a period of 12 months, not even 24 months, not even 36 months, only if we can hold these instruments like equity shares, mutual funds for 12 months, this will be considered as long-term, otherwise short-term. So the rates, as a glimpse, I want to tell you, the long-term capital gain tax, except on sale of equity shares, will be taxed at 20%. For say, all of you, as all of you know, if you are selling a land, if you are selling a plot, if you are selling a jewelry, it will be taxed at 20%. If it is a long-term capital asset with indexation, if it is short-term without indexation. But what is the taxation on equity shares is very important. If an equity share is held for a period of more than 12 months, then such equity share transfer, the sale of such equity shares will be taxed at, the profit will be taxed at 10% of the profits. That too, over and above 1 lakh rupees. Suppose we have bought a share, particular company share at 8 lakh rupees and sold at 10 lakh rupees. What is the profit that we are going to get in this transaction? Is it 2 lakhs? Yes, this 2 lakhs will be taxed at only 10% and not entire 2 lakh rupees. Out of this 2 lakh rupees, first 1 lakh rupees will not be taxed, my dear friends. Only remaining 1 lakh, out of 2 lakhs, 1 lakh will be exempt under section 112A, and remaining 1 lakh rupees will be taxed at 10% per annum, 10%, that is 10% on 1 lakh, 10,000 rupees. So for a sale of share at 10 lakh rupees, you are going to pay only 10,000 rupees tax with the example that I gave. Of course, if purchase value and sale value, if it differs, the tax rate or tax amount also differs, but the rate remains constant. I'm repeating, for equity share mutual funds where the STT is suffered, security transaction tax is paid. The profit on such transfer up to 1 lakh rupees is completely exempt. Over and above 1 lakh rupees, whatever is there, only that much is taxable. So I am very happy to share with you that our attendance has reached 100%. It is house full, my dear friends. I am very happy to speak to a house full seminar today. And short-term capital gain. Nevertheless, we have to speak on short-term capital asset. Till now, what I spoke was on long-term capital asset being equity shares. What if equity shares are held for less than 12 months and sold? In that scenario, you will be taxed under 15% and under section 111A. Please make note of the section, my dear friends. I have not written it in my PPT. If short-term capital asset on short-term capital gain on transfer of equity share, then the tax is calculated at 15%, provided security transaction tax is paid. If it is long-term, 10%. If it is short-term, 15%, as simple as that. The question comes, when STT is not paid, what will be the tax? When STT is not paid, the short-term capital tax will be added with other income and the tax will be calculated like all other. It will be added to other heads and tax will be calculated as per the slabs. Up to 2.5, no tax. 2.5 to 5 lakhs at 5%, 5 to 10 at 20, and up more than 10 at 30%, as we all know. And it is on the old regime. So this is on the tax rate. 20% for the long-term capital asset other than equity shares, 10% for the long-term capital asset being equity shares provided the STT is suffered, 15% on short-term capital asset being equity shares, and the regular tax bracket, regular tax slabs if STT is not paid on transfer of the equity shares or mutual funds. This is on about the tax rate. So I want to explain on concept of grandfathering, my dear friends. What is concept of grandfathering? I want to explain. Can anyone know about concept of grandfathering? Can someone tell me? No, I will only tell, my dear friends. Concept of grandfathering was introduced by our great ex-finance minister. I would be happy if someone can reply in the chat box. Who is that finance minister who introduced concept of grandfathering or concept of taxing on long-term capital gain? Yes? Can anyone tell me? You can chat with me on chat box. Mr. Arun Jaitley, yes, correct answer was given by our Vishal from Hyderabad. Arun Jaitley, sir, in the budget speech of 2018, his last budget speech probably, that is in that last budget speech of Arun Jaitley, he introduced taxation on long-term capital gain on sale of equity shares. Till 2018, 31st March 2018, whatever profit, whatever gain on long-term capital asset being equity shares was completely exempt under Section 10. But upon introduction of tax on the long-term capital gain, concept of grandfathering was introduced. What does the concept of grandfathering say? We have to understand. See, the cost of acquisition being fair market value or the full value consideration, whichever is lower, is compared with cost of acquisition of such asset. Among these two, whichever is higher will be considered as cost of acquisition. For example, please listen to me. You are able to see what I am writing on the board?
Yes, sir. Now we could not. Yeah, we could see, sir.
Hello, friends. So I would like to show you some of the examples. I want to give you the feeling as if you are sitting in front of me and listening to this lecture. My dear friends, say a person has bought a share. A person has bought share in 2010. Bought ITC share. Don't ask me what was the price of ITC in 2010. Assume the share price was 50 rupees. Purchase price is 50 rupees. I use short forms for the quick understanding and quick writing. Please don't mind. So in 2010, he bought for 50 rupees one share of ITC. In 2020-21, he is selling this share of ITC at 210 rupees. Now, what is the cost of acquisition? If we consider 112A for long-term capital asset, this being sold in 2021, the period of holding is 11 years. So 11 years means more than 1 year, it is long-term capital asset. So transfer of long-term capital asset is assessed under section 112A of Income Tax Act, where he required to pay 10% of the tax. But my dear friends, no indexation benefit is available for equity shares. Absolutely zero indexation benefit in section 112A. So now we want to see what is the equity share value. It is not 210, that is sale consideration less cost of acquisition, that is 50, is equal to LTCG, that is 160. This is wrong. You have to apply something called as grandfathering. Grandfathering. What do you mean by this? In this case, we say, what was the price of ITC? ITC price on 31st Jan 2018. 31st Jan 2018, we have to see the BOW copy. What we have to see? The BOW copy we have to see. BOW copy is available in the website. In the website, you have BOW copy. We have to see what is the ITC share price. ITC Limited is at 271 rupees, my dear friends. On 31st January 2018, the share price of ITC is 271. Is 271. Cost of acquisition will be, please see this one. Cost of acquisition of such asset. What is the cost of acquisition? Can anyone answer me in the chat box? 50 rupees in 2010. Yes or no? In 2010, it is 50 rupees. Now, as far as grandfathering is concerned, it is not just 50 rupees. It is COA as on 2018, COA as on 2018, or FMV of such asset as on 31/1/2018. FMV is nothing but the value in BOW copy. In BOW copy, in Bhav copy, 271 is the value as on 31st Jan 2018. And then we have to see full value of consideration received or acquiring as a result of transfer of capital asset. So full value of consideration is 210 rupees. So it says lower of FMV or sale proceeds, lower of these two, 271 or 210, whichever is lower, is 210. And 210 is compared with cost of acquisition. And when we compare cost of acquisition and 210 rupees, whichever is higher, the higher of cost of acquisition or lower of FMV or full value consideration has to be considered. Among 50 and 210, 210 is the higher one. So the cost of acquisition while calculating the long-term capital gain on ITC, sale consideration is 210. Cost of acquisition is also 210. So LTCG is nil. I think you understood what I told you. If you want me to repeat, people can ask me. I'll definitely repeat this and explain you in a better way once again. People can answer to me in the chat box. To summarize this, I tell you, my dear friends, cost of acquisition is the concept of grandfathering, where according to grandfathering, we will consider the cost of acquisition or FMV as on 31st January 2018 or full value consideration, whichever is higher as the cost of acquisition for the purpose of calculating the capital gain. Repeat it, sir. Vijay Kumar is asking, please repeat it, sir. Yes, with the same example, I will repeat, my dear friend. So I told ITC is a share, company share. You bought it in 2010 for 50 rupees. This 50 rupees share in 2020-21, now you are selling at 210 rupees. When you are selling for 210 rupees, cost of acquisition is not 50 rupees. It is on the basis of grandfathering. What is the concept of grandfathering? Understanding the cost of acquisition. The cost of acquisition under grandfathering is nothing but higher of cost of acquisition of such asset, that is 50 rupees, or lower of the FMV of such asset as on 31st January 2018. So 31st January 2018, what is the value of ITC? How will I know? I will have to know this with the help of Bhav copy. So Bhav copy, this is what I'm sharing. Bhav copy, the Excel sheet what you are seeing is a Bhav copy, which I have downloaded it from NSC website. You can also download it from BSc website. You can compare NSC and BSc, whichever is the highest price, you can take that. BHAV, Bhav copy is what you have to download from NSC to determine what is the value of a particular share as on 31st January 2018. So on that day, the value of ITC is 271, and the sale proceed is 210. What does it say? Lower of FMV, that is 271, and the full value consideration received on sale of the ITC share, that is 210. 271, 210, whichever is lower, that is 210. So out of 210, this we have to compare with cost of acquisition in 2010, that is 50 or 2010, whichever is higher will constitute the cost of acquisition for the purpose of calculating the long-term capital gain on sale of ITC. So 50 and 210, whichever is higher, is 210 From 210, if you deduct 210, it is nil. If I slightly change the example, assume the value as on 31st January was only 200 rupees. Then least of these two, I should not consider 210. I will have to consider 210 or 200, whichever is lower, that is 200 rupees. This 200 rupees I will compare with 50, whichever is higher, I will take as cost of acquisition. Then in that scenario, my profit will be 210 minus 200, that is 10 rupees per share. So into multiplied by number of shares, you will get the answer. Yes, we can conclude that if the sale price is less than MV, that is market value as on 31st 2018, the CG will be nil. Correct, you are absolutely right, sir. So now I will focus on the next thing, assuming that you have understood, or I will give you one more example. Suppose one more scenario, we have to understand one more scenario. What if the share price of ITC as on 2010 is not 200, not 50 rupees, is 250 rupees. Can we say that on 2010, the share value for what we bought is 250 rupees. Bow copy says it is at 200 rupees. And sale price in 2021 is at 210. In that scenario, 200 or 210, whichever is lower, that is 200 again. From 200, we have to compare with 250, whichever is higher. In that case, 50 rupees. 250 rupees is the value. So 250 rupees CS, cost of acquisition share, you have sold for 210 rupees. In this scenario, we are going to have long-term capital loss. Long-term capital gain is minus 40, in term minus 40 rupees. That is long-term capital loss. So if the cost of acquisition based on concept of grandfathering is more than the sale consideration, then you will get a benefit of long-term capital loss to be carried forward or to be set off against the long-term capital gain. Did you understand? I have explained all the possible three scenarios, my dear friends. One, when it is being nil, one when it is being capital gain, one when it is loss. All the three scenarios I have explained. If at all, if you have any doubt, you can ask me now itself. I will clarify immediately. Hope that you have no doubt. I will go on and go to the next concept because we are running short of time. Tax planning is something that we have to focus on. My dear friends, this is the crucial time that we are seeing. Classification of asset into long-term and short-term is the first stage that we have to do. Whether an asset is short-term or long-term. Based on that only we can start the planning. The next important thing is whether transaction in shares is speculative transaction or non-speculative transaction is one of the very important thing that we have to assess. To tell you in particular, every intraday trading, every intraday transaction is definitely considered as speculative in nature, and it is a speculative business under the head business or profession in Income Tax Act of 1961. Other than intraday, if you are taking the delivery of the shares, it's a cash transaction. You are buying the shares by paying the cash, by transferring it through bank. When I'm saying cash, it is not the hard cash, it is transferring it through bank. When you are actually taking the delivery of the contract, it is considered to be non-speculative business if an assessee considers transaction in share as income from business or profession. The next question comes, sir, is transaction in equity share should be considered under the head business or profession or under the head capital gains? Can I expect some answers from the dignitary members here to tell whether it is under business or profession or it is under capital gains? I'll wait for 10 seconds.
Sir,
Pawan
it is,
Kumar, he's
sir, it depends on the frequency, sir. Frequency of investment or how you are dealing in equity shares. If it is of frequent nature, then it is treated as a business or profession income, business income, not profession. And when the frequency is less, then you can go for capital gains. So a person can have both the income under business as well as capital gains, depending upon how he is trading in a particular scripts or investing in particular scripts. Like
wonderful,
that,
wonderful. May I know the good name of the person who spoke right now?
sir, my name is Sujit Jain, sir. I am from Nellore.
Nellore
Very
branch
good,
chairman, sir.
Sujit Jain. You gave a very good insight, and I'm very happy that you spoke to me on the seminar because once you speak, this seminar became an interactive one. So this is what is very much required when a CPE program is done, not a one-way traffic, but as the traffic from the other side is also very acceptable, and it is tremendous to hear some words between the seminar. Thank you.
Thank you,
Frequency
sir.
is one of the very important thing that has to be seen. Then what is the usual activity of the assessee also is a very important thing. Is trading in equity market or trading in shares or derivative market is a primary business of the investor, is the primary business of the assessee, or is a secondary hobby activity of the assessee, is also a very important thing. Then comes third, the intention of the assessee, whether his intention in investing into the share is for the purpose of investment or is for the purpose of gaining money with price fluctuation. If it is for price fluctuation that he is dealing in, it may be considered as business or income. It is not necessary. Only with the intention of having the transaction for price change, should it be considered as business or profession? Not necessary. One of the consideration, see what are all the points that I am spelling out right now is not conclusive. Here are some of the parameters. It is a very subjective matter for a chartered accountant to assess whether a particular assessee's transaction in equity share to be shown under the head income or profession, income from business or profession, or from income capital gains. So this is a very subjective matter based on frequency of trading, based on the activity of the assessee, based on the intention of the assessee, based on the past disclosure. I would not suggest to take a different view on equity shares in different years. In one particular assessment year, you show the transaction under business. Under some other assessment year, if you show that under capital gain, and again in some other assessment year, if you show that as a business, then it is not an acceptable one. Then you are bringing the assessee into the well of income tax litigation yourself. We should maintain a consistent practice in disclosing the income under a particular head, either business or profession or capital gains. Most preferable one for the disclosure in income tax is capital gains, according to me, in a rational circumstance. If an assessee is a rational investor, then I suggest please show the transaction in equity market, transaction in mutual funds under the head capital gains and not under the head business or profession. If I have to show you in the this one, Winman software, I will tell you. So from gateway of Winman, you can select all basics I have included. So in Winman, you have to select the head of income, either business or profession or capital gain. Once you specify the business or profession or capital gain, then you can accordingly show that or disclose that in the return. I will first show how to show it in capital gain. So in capital gain, are you seeing my cursor? You're able to see my cursor, movement of cursor, my dear friends?
Yes.
Yes, sir. Yes.
Thank you very much.
Yes, sir. Yes, sir.
Thank you very much. Thank you very much. Hope I am going slow or am I going too fast?
No, no, nothing, sir.
Thank you. Thank you, Jagan sir, for your valuable feedback. So, Winman has given a tremendous opportunity or software tool where we can feed the data. It will automatically classify whether an asset is a short-term capital asset, long-term capital asset. Wonderful, no? So for that, auto classification of STCG and LTCG have to be clicked. So here you have Excel symbol. If you click an Excel symbol, export format with the data or without the data, you can do. So once you take it from export the format with the data or without the data, then it will give you an Excel sheet. In that Excel sheet, you have to do all the transactions. I will show you this, what will be there in the Excel sheet. Just a minute, give me some time. This things are opening. So auto classification window is open now. So we have to download it and put company's name in particulars, quantity of shares sold only during the year, date of purchase, date of sale, is it LTCG or not LTCG? There is a drop down menu you can press. It will automatically come as yes or no. Sale consideration, for what value you sold. If there is any small brokerage or anything that you have spent on that. Net consideration, you need not specify. If you specify these information, it will automatically take. Cost of acquisition is our important thing. Then FMV, what I spoke on grandfathering. The FMV as on 1/2/2018, before 2018 is 31st January 2018. This FMV from the help of bow copy, we have to fill. If we fill all these things, no need to fill any of these data, whatever is mentioned in gray, whatever is mentioned in gray, we need not have to do any filling in these cells. We have to fill only in white cells. For example, ITC, quantity is 1000 shares. Date of purchase is say 01/06/2010. Date of transfer is say 01/02/2021. Whether STC, LTCG, definitely yes. Sale consideration is 210 into 1000 shares. That is 2,10,000. I will not use formula because I don't know whether the formula will be taken. I say 2,10,000 rupees. Selling expenses, I make it 0 because STT on sale of equity share under capital from capital asset is not allowable. Under the head capital gains, STT or other expenses are not allowed. If at all, if there is any brokerage and other things, you can definitely take it. I assume that brokerage is about 500 rupees. Cost of acquisition at 50 rupees, I say 50 rupees for 1000 shares is 50,000 that time. FMV as on 31st is, we have seen that 271 rupees. So it will be 2,71,000 rupees. Any doubt?
For long term, short term, it will not calculate, sir. We have to give manually.
No need to give anything. You have to only give the dates. Based on the dates, it will automatically take whether it is long term or short term. Okay. So I will also mention the same ITC, same company ITC. or I'll say Infosys. Infosys, for your understanding, say 100 shares I bought on 107/2020 and sold on 2nd February 2021. Then it is short-term capital gain. No, I'll say no. Okay, so sale consideration, say about 1000 in February 21, it was about 1300 something. So 1300 into 100, 1,30,000 rupees, and selling expense being 300 rupees. I will take. I will answer to the questions whatever is there in the chat box. Please give me some time. Acquisition cost, actual cost of acquisition being in 1st July 2020, it was at 800 rupees, my dear friends. You believe me or not, Infosys was trading at 800 rupees in July and was trading at 1,300 rupees in February, approximate to that range. We could have made 500 rupees profit from trading in Infosys in this pandemic time. But unfortunately, some of us could not do that because we were busy in other work. I'll come to it. I'll come to it. First, let me close the loop, then come to the questions. Actual cost of acquisition is 800 rupees, you assume. 800 into 1 is 100 shares is 80,000 rupees. And FMV not required, not applicable, because whatever share bought after 1st February 2018, concept of grandfathering will not apply. Concept of grandfathering will not apply. So this data I will save and I will close it. I will close it. Now I'll go to Winman. Paste from Excel, paste from Excel. Add to overwrite, because nothing is there, I'll write overwrite. So here I'll right click it and paste from Excel. Overwrite. I will select the path. Anil B, auto populated, auto classification. The name itself is auto classification. Yes. See, did you get the data? Yes. Short-term capital gain, long-term capital loss. See, if you see here on long-term capital gain, 112 is not there. So here auto classification, whatever is there, it is shown here. You have to press here and it will show the auto classification. FMV is wrongly shown. FMV is wrongly shown as 27 lakh 10,000. I think I wrongly entered it here.
Sir, what has happened is per unit rate you have given 2,71,000. That is there.
Oh,
per unit rate
okay,
you
okay,
have to
okay.
give
Understood,
over there.
understood. Very good, sir. Thank you for enlightening me. So I should have given per unit. See, per unit is there. That's why professionals like you should be there, sir. Kelavam ballavarinda kaltu, kelavam malpavarinda kandu, kelavam sugnanadim nodutum, kelavam sajjana sangadinda mariyal. So this is kelavam sajjana sangadinda mariyal. So you will definitely understand, because this word, whatever I told, is old Kannada. Old Kannada resembles Telugu. So sajjana sangadinda mariyal is also same in Tamil, Telugu, I think. Yes or no?
Yes, sir. Yes.
So kindly see, it will not make any much difference. I will reclassify it. See, if there is any error, how we can rectify also I have shown. Wonderful. I am very happy.
So 2 copies are open, sir. That's why it's coming like that.
That's why I saved it in a different one.
Do another name, sir.
One more suggestion here I would like to add value
Yes, sir.
addition. Sir, you can just click on the copy button which is there in the format copy and help. Not here, sir, in the Excel sheet which comes out.
Okay.
which you are using, can you go to that Excel sheet, that the auto classification sheet? If you can go to the worksheet,
Yes.
there is on the
Copy.
left side copy. Directly you can go to Winman. Here you can paste, sir. On the Excel tab, you go to the Excel tab. Yeah, paste from not here.
Paste from Excel. Yes. Thank you. Thank you very much.
Recently,
Sir,
I have learnt about this, sir, because all along in the past I am into practice for 8 years. I was typing each and every entry and making my staff do that. But now only I understood the benefit of using this Excel and getting all this information quickly.
Correct. So from data from clients, what we have to get is the test data. So test data I have put what are all important to be received from the client. We have to receive sale price, date of sale, number of shares, purchase price, date of purchase. That is sufficient. Profit and loss also not required. So if we have these information along with the company's name, we can calculate everything by just copying this in the data in the Excel sheet that is provided by Winman. It will automatically classify whether it is a short-term asset or long-term asset. This is all about the equity shares that I wanted to speak. Once that is done, 500 rupees loss under long-term capital gain and 49,700 rupees is the gain on sale of Infosys shares being short-term because it was sold for a period of less than 12 months. So this is on classification of the data. Then any intraday transaction cannot be considered in capital gains because we are not taking the delivery. The underlying concept behind this is when you are doing an intraday, no delivery of share takes place. No delivery of share takes place. Let me go to chat. How to calculate capital gains on shares allotted in IPO because no STT is paid on them. See, it's a very good question. But when you have sold the goods, when you have sold the shares through stock exchange after allotment, then you would have paid STT on sale of transaction, then it will be definitely calculated under section 112A. How lump sum brokerage paid be proportionate among different share? What is this lump sum brokerage? If you have paid in advance, you can take a proportionate one. If it is a recurring one, I mean, if they have given an account for you in respect of brokerage, then you can take whatever has eroded the value, you can take that as an expense and go ahead. But STT shall not be considered as expense on transfer of shares. So all intraday trading, because there is no delivery taken place, you cannot show that under capital gain. It has to be necessarily under the business or profession is intraday transaction. Then the next question comes, a very important question. Is derivative contract being non-delivery contract is speculative in nature? Can anyone answer to this question over chat box? Is derivative transaction is a speculative one? No is the answer. Correct. Then no. Can anyone say yes? Any rebel candidates, rebel chartered accountants? Yes, sir. It is definitely a speculative one. The derivative contract, if it is done through a recognized stock exchange, then it is not a speculative transaction as per income tax. So any derivative transaction, any derivative contract is non-speculative in nature. I request one of the member to please unmute, mute yourself because I am able to hear some voice.
You muted, sir.
I'm repeating it once again. Derivative contract is purely non-speculative in nature if it is transacted through a recognized stock exchange like NSE or BSE. So you can enter into a derivative contract and show that under business or profession. My next question is, is derivative, can the derivative contract gain or loss be shown under the head capital gains? My next question. I'm very happy, sir. People are extremely active and they're giving the answers. Others, other than Tiruvayur Kumar, thank you very much for your answer. Sujit Jain is very active. Subramaniam sir is very active. So I want other chartered accountants also to be active, like Indraja madam is also being very active. So yes, my dear friends,
derivatives
contracts.
Sir, derivatives of commodities, currencies, and all are same, sir. Treatment.
Yes, derivatives of equity, derivatives of currencies, derivatives of any commodities cannot be classified under the head capital gain because no delivery takes place, no capital asset exists in terms of derivative contracts. Because it is a contract and not investment in a particular share or a particular asset, it cannot be classified under capital gains. It has to be necessarily, compulsorily shown under the head business or profession.
Sir, because salaried people who are employees in government employees and private employees, they do few transactions in a year in derivatives, knowingly or unknowingly. So then what to do, sir?
Sir, unknowingly how, sir? Knowingly only they should
unknowingly that it is a business transaction to be declared under business.
Okay. So if they do a derivative contract by being a salaried person or being in any other profession, this has to be disclosed under business or profession. If they have not disclosed it, it is a wrong disclosure.
Is it as per sir? Is it as per guidance note what you are saying?
Sir,
is any judgment is there?
It is as per the guidance note also. It is as per my judgment also. There is a guidance note saying that it is not a capital asset. Because in a derivative contract, there is no asset existing, sir.
Sir, contract is asset, no, sir. Contract is an asset.
No, contract is not a recognized asset in this one.
It is a right to purchase, sale, and the right to sell the shares. It is a contract and it is an asset.
Sir,
we
if
are
I
showing
may,
it as an asset in the balance sheet also. At the year end, we are showing that it's an asset only, no? Right to purchase a contract or right to sell shares is an asset.
No, sir. That cannot be considered as a capital asset. It is clearly guidance note is given in this behalf by our institute, as well as there is a clarification by Income Tax Department also, stating that I will share it with you. Right now, I don't have, but I'll definitely share it with you once this one is over.
Sir, also
any derivative contract cannot be considered
section
under
214 also does not include derivatives in the capital asset list. That is also needs to be considered.
Yes, sir. Can you please repeat it once again?
Sir, section 2 subsection 14, which defines a capital asset, does not include derivatives. The list of items which are capital assets and on which the capital gains will arise does not include the delivery contract, this derivative contracts.
Correct. Exactly.
Inclusive definition, sir. It is, I think, inclusive definition.
No, a capital asset definition under section 2 subsection 14 is an exhaustive definition, sir. Is an exhaustive definition. It clearly says which are the assets and which are the capital assets and which are not capital assets. Understood. So can we move ahead?
No, sir. I think we can't do, sir, because the first clause itself says that capital asset means property of any kind held by an assessee. So in that case, it's a property. Derivative contract is
any securities held by FIIs. Yes, it says. It says property of any kind held by the assessee.
It's a property. We are showing it is under a balance sheet as property only in the 31st March financial statements.
You can take this view, but it is a very income tax. I'll come up with. I'll definitely tell you what is the guidance note as well as the clarification given by Income Tax Department, clearly stating that it is not this one. But as our the member name, may I know the member name?
Jain, Sujit Jain.
No, not Sujit Jain. Sujit Jain is speaking to me now.
Tiruvai Kumar sir, our founder, treasurer, moderator.
Tiruvayur sir. So you are absolutely right in contesting that property of any kind held by an assessee is considered as an asset. But here, are you considering derivative contract as any property?
Yes, sir. It's a
The
property.
asset existing. Where is the asset existing?
Yes, it is a property only, sir. Whether it may be current asset, fixed asset, movable asset, this is a different thing. Definitely, it is a property.
It is neither a movable property, nor an immovable
Whatever
property.
may be, sir, it is a property showing under the asset side of the balance sheet.
Okay, then definitely you can contest this, sir, because see, ekam sat vipra bahuda vadanti is a Sanskrit quote. It says one thing can be seen by different learned people in a different way. So, as far as my judgment is concerned, I prefer the derivative contract should be shown under the head business or profession. Of course, as the learned fellow chartered accountant member is saying, that it can also be, why it should not be considered under the capital asset. Definitely we can argue upon it and see if the positives are there to consider it as a capital asset. We can also consider it under capital gains. But my judgment, my view on this particular thing is derivative is a contract which has to be disclosed under the head business or profession.
Sir, whether this derivative contract can be valued and brought into balance sheet, what value will assign? Because sir is saying about that there is a value and we are bringing it in balance sheet. I don't think the derivative contracts value, which are unexpiring on the date of 31st March, are brought into books. Only the margin amount is taken by the broker. I think no value is assigned to those contracts.
Correct. Here, the value of the property is only what we have expended. Whatever has been spent on the contract can be considered as the value of the contract or value of the asset if you consider it as an asset. So, my dear friends, we will go ahead and this is totally a different ball game. If at all, if as per Tiruvayur sir, if it is considered as an asset, according to me, the value to be assigned to that asset should be whatever margin money paid on futures or whatever premium that you have paid on call or put option.
Yes,
that can be the value.
Because some salary people, friends, they are asking me to report it under capital gains. That's why I'm stressing on this point.
Sir,
I am also saying it's a business, but they are requesting me to show it under capital gains. So I am thinking, is there any way to show it under capital gains?
Sir, I see one way, sir. Your argument is wonderful. Which says, see, capital asset means property. I am referring to Income Tax Act. If you want me to show it in this one act itself, we will open in the act. So if you see here, however, the term capital asset shall exclude the following: stock in trade, consumables, stores. This one, I'll start from the beginning. Capital asset is defined to include, as an inclusive definition, any kind of property held by an assessee, whether or not connected with business or profession of the assessee, any securities held by FIIs which has invested in such securities in accordance with regulations made under SEBI. However, term does not include stock in trade, movable property held for personal use, specified gold bonds and specified bearer bonds, agriculture land, we will not go deep into agriculture land, and deposit certificate issued under the gold monetization scheme 2015. So these are all what has been shown. There is some still more definition, but which is not shown here. So based on this, we have to fit the name into a securities. So here all kind of property held by an assessee include securities. Of course, it may include securities. The definition of securities in section 2, subsection 17 in explanation 2 says, for the purpose of this clause, the expression FIIs shall have the meaning assigned to it under section 115 AD. The expression security shall have the meaning assigned to it in clause H of section 2 of Securities Contract Regulation Act. So SECRA also, Securities Contract Regulation Act 1956, also we have to see whether this derivative contract fit into section 2 and clause H of that particular act. So based on that, we can conclude whether it can be business asset, business or capital assets. Is that fine?
Okay, sir. Okay, you can go ahead.
Sir, we can have a private discussion on this and see more things. So now, when we conclude that a derivative transaction is a business income, then the question comes, what is the turnover? Because we are dealing with a number and we are dealing with the value of the contract. Say, for example, Nifty is trading at 15,000. So we are saying from 15,000, it may go up to 15,300 in call option. So this 15,300 rupees is the value of the contract, or the premium paid to enter into the contract of call option is the value of the contract. That is, the premium paid on the entering of call option, according to me or according to the guidance value, is the value of the contract, that helps us to determine the turnover computation. That is nothing but the difference of purchase price and sale price. Whatever profit or loss arising from derivative contract shall be considered as the turnover for the purpose of income tax in absolute numbers. I will show you an example. In tax data, please see P&L here. So there is a call option CE of Ashok Leyland. Buying value is 14,43,000 and sell value is 6,91,000. A loss of 7,51,200. We have another Ashok Leyland November contract at 2,26,200 rupees purchase price and 1,96,000 selling price, being loss at 30,000 rupees. And we have another one at 4,66,000 here. So a realized profit or loss, the difference between sale value and purchase value, will be considered for the purpose of determining the turnover. So here are some of the transactions where we know what is the profit or loss arised from transaction in derivatives. So for our purpose, for all the purpose of taxation, only column H is important in determining the contract in absolute numbers. You should eliminate the figure signs, either positive or negative. You should eliminate. Take the absolute figures and then calculate what is the turnover. I have calculated it. I have taken all the positives. I have filtered all the positives and taken it here. All the positive values in the transaction. Here, see if I do filtering of numbers greater than or equal to, I will not say greater than or equal to, I will say only greater than 0. I'll get only positive figures. I have copied all these positive figures into a separate sheet and calculated the total of it. Positive comes to 82,30,789. And please see, I will then filter all negatives by filtering, clear the filter, then go to less than 0. Then I get all the negative losses I copy all these losses and paste it in a separate sheet for negatives, and I remove the signs. The total of negatives stands at 76,48,000. So the total of positive and total of negative on a consolidated note will give me the total turnover that I have done in derivative contract. Understood? Yes, Parag is saying add just an extra column in Excel and use ABS. Of course, yes, it's a good formula. Absolute number formula is equal to ABS cell reference. So we can do that. We can definitely do that. Thank you, Parag, for enlightening me. I will remove this one, clear filter, and add one more column. Use absolute. Everything came. So with this, if I calculate the total, it will be 1,58 lakhs 78,894. 1,58 lakhs is the turnover. So calculation of turnover or turnover computation with the derivatives is the difference between the purchase value and the sale value in absolute numbers. Then the next question comes.
Sir, what is the logic, sir? Can you explain?
Sir, because the logic behind the buying and selling price is, see, the net outflow or net inflow is considered as the transaction because it's a business. Here, sometimes you will enter into a sell option, a short option, then I mean short contract, sometimes long contract, sometimes buying of option, sometimes writing of option. So when there are too many things, the very common thing is to make this as the difference between the purchase and sale price. This might be the logic behind. This might be the logic behind the giving of difference between the purchase price and sale price by the guidance note or clarification given by income tax department. So when we go on allowable expenditure, once we calculate the turnover, how to show it in the P&L account. So I have been practicing it to be shown like this. If this is a P&L account for the year 1920, you may change it to 2021. I suggest that in trading account will only this will be appeared. No, not exactly. In trading account, you can get other information also. But the main data, main basis is that it is very common for both short selling and long buying, as well as call option and put option. Writing the call option, buying the call option, writing the put option, writing the call option. For all these things, difference is the main criteria. The intention of the persons is also the difference in derivatives. So I feel the absolute numbers is the correct method as adopted by income tax department. So when we do this, it is a very tricky one to show it in P&L account. I have been practicing in my profession to show this as all positive position in derivatives as income under the head income, all negative positions in debit side. By doing this, I will get the proper profit or loss. If I show all positive in a credit side as income, all positive as all negatives as this one in debit side, then I can arrive at either gross profit if they have net profit or gross loss if they have total loss in the derivative contract. So this is what I suggest and I practice as a professional.
Sir, but you said turnover means total profit and loss put together. Then we have to give.
Definitely. So
then we have to put that in this income side.
Of determining the purpose of determining whether you have to apply section 44 AD or whether you have to do audit under section 44 AB, turnover plays a very important role. Otherwise, turnover does not have any relevance, dear fellow member.
So do you mean, sir, 44 AD also we can go in the case of derivatives?
Yes, definitely. My next question is whether can we arrive at when section 44AD is applicable for derivative and when section 44AB is applicable for derivative. I'll definitely come to that question. Before that, I have certain things to be questioned. I'll definitely do that and get back to you. So once turnover computation is done, in respect of derivative contracts, turnover computation is mainly to understand whether the audit should be done under section 44AB, or you can also disclose the income under section 44AD based on presumptive taxation. So if the turnover is less than 2 crores in the derivative contract, then you can definitely show the derivative transaction under section 44AD. I have been practicing it since the day I started my practice, and we have absolutely zero problem in this, and it is accepted by income tax department itself. My dear friends, I would like to share, I was preferred by income tax department to give some insights by the professionals in terms of derivative contracts to assessing officers themselves. In Bangalore, we have Training Institute of Direct Taxes. In the Direct Taxes Training Institute, they had preferred me as a resource person, and I had discussed all these things with them. And in income tax department, it is very acceptable. Derivative transaction is very much eligible business to be shown under section 44AD, the presumptive taxation, if the turnover is less than 2 crore rupees. And my question to you is, what is the limit for section 44AD now? It's a very basic question for a chartered accountant, but still I would like to ask this question.
1 crore.
1 crore is a wrong answer. I am asking specific to derivative contracts. If an assessee is directly dealing in derivative contracts, what is the turnover limit for audit for the assessment year 2021? Sorry, 21-22. Now we are living in 21-22. No? So assessment year 21-22, what is the turnover limit to understand whether a particular derivative assessee should be taxed or not taxed? Sir, I'm asking for the assessment year 21-22, not for 22-23. Sujit Jain, sir. Yes, Sujit is absolutely right. The limit under section 44AD, the limit under section 44AD, 44AB, sorry, is 5 crores and not 1 crore. Is how much crores? 5 crores and not 1 crore. Because if at all, if you transact through derivatives, 100% transaction is through banking. So the question of 5% exceeding the cash transaction does not arise with respect to derivative transaction if a person is blind, is solely trading in derivative contracts. So section 44AD is applicable if the turnover is less than 2 crores. Between 2 crores and 5 crores, no audit is required and you cannot apply section 44AD. You have to prepare P&L account and then show the business profit. And if the turnover is more than 5 crores, the assessee has to definitely get his books of accounts audited with respect to derivative transaction. Please.
Below 2 crores, sir. Below 2 crores, audit is required.
No. Below 2 crores, no audit is required.
44AD, yeah?
44AD is not. You can either go for 44AD if his profit is more than 6%. If profit is more than 6%, you can go for 44AD. If turnover is more than 2 crores but less than 5 crores, normal is sufficient. Okay. And
below 6%, sir. Below 2 crores, below 6%.
No audit is required according to me, but many chartered accountants oppose to my words because my own principal under whom I did my articleship opposes that, but I do, and I have also won the case in this regard. If the turnover is less than 2 crores and if you are showing loss, you are permitted to show the loss and file the returns before the due date to carry forward the losses to next year.
So,
is that clear, sir?
Even up to 2 crores or above 2 crores, up to 5 crores, so no audit is required.
No audit is required, sir. Absolutely.
Whether below 6% or above 6% profit.
Below 6%, even in loss, I am saying no.
Even in loss.
And I'm saying 6% profit does not arise.
Even if loss, you no need to go for audit.
Yes. So Parag is giving, if you have a loss, you can show presumptive income at 6%. I don't agree. Why you have to simply pay tax at 6% when you have no profits? Please show the loss and carry forward the loss, Mr. Sujit. That would be the wonderful approach for your client.
Sir,
Yes.
in the given example, you are taking capital gains on the profit and loss account side credit side, sir.
Yes, yes.
Are you opinion that one SC is doing positive derivatives and capital gains, sir?
Correct. He is also trading in stock market with respect to shares in a cash delivery market, and he is also doing a derivative transaction. So I will show only in P&L account, I will show this, but while computing, I will exclude it and show under the head capital gains.
Okay, sir. Thank you.
Is that fine?
Okay, sir.
Sir, here net profit.
For the purpose of presentation, I have shown here.
Sir, here net loss from long-term capital asset or short-term capital asset, sir, net loss?
No, this is just an example, sir. Net loss from long-term capital asset, I have shown in P&L account only for a purpose of presentation to bring everything into P&L account. But when I'm computing the tax in Winman, I will exclude this and show it under capital gains.
Sir, one more point is, what about the disclosure? How you will disclose in the profit and loss account in Winman when we fill the ITR 3?
This is a very good question, sir. This is the problem that I faced. But where in ITR, if we go, ITR 2 is recommended. I'll show you having the assets and liabilities.
No, sir. In the case
you
of
have
three,
to
sir,
show ITR 3, sir.
Three.
I will select ITR 3. Sorry, I will select ITR 3. Help, I have to go now.
Because as you said, up to 5 crores, we don't need to go for audit. Then the only return we can file is ITR 3.
Correct. Exactly, sir. So here, proprietor's capital. See, if you are having a profit of more than 6%, this question does not arise.
Yes.
Do you agree with me?
Yes, I agree with you, sir. We can show.
If we don't have sufficient profit of 6%, I will tell you where we have to show. So in trading, we don't open trading account. We do only this one, income. Other operating income is where I show. Okay.
Here you will show whatever the positives which are there, and on the negatives you will show under other expenses. Am I correct?
Correct. Exactly.
Okay, sir. So I just wanted to confirm this is what we were doing for the past 2-3 years. So just wanted clarity on that. Before that also we were not showing the direct operating revenue, only the net figure, that loss or profit is there. If profit is there under other operating revenue, the profit we are showing along with other business, means he is having another trading business, like that we were doing. Okay, sir. Understood. We got the clarity.
Sir, loss where we have to show, sir? Loss from derivatives where we have to show?
Sir, loss from derivatives we have to show under other expenses. Expenses will be there, no? Hello?
Sir.
Other expenses we can show, sir.
Other expenses.
Yes. Is that fine? Yes.
Yeah.
Or you can also tell me, sir.
Sir, we are showing income as the direct income and showing the loss as the indirect.
You can show as direct expense also. Direct expense also you can show in others. Absolutely no problem. Absolutely.
Sir, if we show like this, will department misunderstood this as our turnover?
No, it should not, because
Sir, give an example.
it is a derivative contract. You have to clearly mention if your anxiety is very good, sir. I say other income, they may treat it as this one turnover, but if they treat it as turnover wrongly and sends you a notice, you can be in a very good position to show that it is a derivative contract and how to arrive at that.
But any IT circular or anything is like that other than our guidelines?
No, this is a practice. I don't see any circular in this regard. This is a practice followed, and this is my own judgment.
Okay, thank you, sir.
Sir, in the given example, that closing stock of shares we have not considered. But in the balance sheet, we have to consider that one.
I did not get you. Please pardon me, sir.
Of derivatives not sold.
No, closing stock of derivatives we are not showing anywhere, sir.
In the balance sheet, we don't show, no?
No, we don't show.
Even in the balance sheet also.
Yeah, because we are not considering it as an asset, no, sir.
Okay.
Sir, one more thing for this derivatives, what is the nature of business we are selecting in the business code? Others?
Others and showing it as derivative transactions.
Is it there, sir? That class is there, derivative transactions class is there. Can you check, sir?
Other financial services are there under section 44 AD or other than section 44 AD if you want to show financial services. In financial services, commercial banks, commercial housing finance, investment activities we can show, sir.
Okay. Okay, sir. So this is the practice you are following, right? Because
Yes,
we are
yes.
doing this wholesale or retail trade, others we are showing. That's why, sir, we wanted that clarity. We can go for this. Okay.
Yes.
Investment activities under financial services.
Correct.
So investment means again it may.
Yes, sir.
Maybe capital gains, no, sir. No.
No. It will not be capital. It's only nature of business, no, sir.
Sir, what about the premium?
Sir, premium is only what I'm saying.
Will it be part of turnover or?
No, what premium?
Options.
Premium, options premium.
No, that's what. Once your contract is open, the open contracts we don't show anywhere in the P&L account or balance sheet. It's only closed one. Once the contract is closed, only then we will show either it as a profit or loss.
No, sir, for purpose of calculating the turnover. Whether the amount received on sale of option is also a turnover or the.
Yes, definitely. Amount, see, you might have received 1 lakh rupees as this one, the profit from option. Okay. 1 lakh rupees from sale proceeds or settlement of call option. You might have paid a premium of rupees 20,000 rupees. So in such scenario, 80,000 rupees being the profit should be considered for the purpose of turnover. 20 per thousand and 1 lakh is only taken for the purpose of determining 80,000 only. Did you understand? The premium paid is 20,000 rupees. The settlement is 1 lakh rupees. So 1 lakh rupees minus premium to 20,000 rupees will be your profit. If you have paid a premium of 1,20,000 rupees, then your settlement is 1 lakh rupees only. Then loss of 20,000 rupees. So before taking without taking the negative value, we will consider 20,000 as a turnover. So premium and sale proceeds will be considered together for calculating the turnover, whether it's a profit or loss. Just give me a second. Hello. 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 You are with me?
Yes, sir.
Yes. So this is all about the derivative contracts that we have to see. So turnover is what we have discussed. What are the allowable expenditure? All the possible expenditure with respect to derivatives can be considered as the expenditure. See, if you see here, there are numerable expenditure head: brokerage, GST, clearing charges, exchange transaction charges, integrated GST if it is there, SEBI turnover fees, STT. Even STT can be considered as an expense when it comes to derivative transaction under the head business or profession. Stamp duty, state GST. Along with that, if you see my P&L account, even our audit fee is included. So all possible expenses which is in connection with derivatives can be considered as the expenses and is allowable in nature. Do you understand? So stating this, I would recommend, if at all, if the turnover is less than 2 crores and profit is more than 6%, kindly show under section 44 AD the full profits. Though you have 30% profit, I request you don't advise the clients, or we usually don't do that. I'm just telling, we should not disclose under presumptive income at 6% when the assessee has 30% profit in derivatives, because it is easily traceable. If the asset, if the notice comes, or if it is selected for scrutiny by CASS method, then the case will not stand. So it is easily accessible and known that if you have made 30% profit, I would request you, please disclose 30% under 44 AD. Do not restrict the profit to 6% because you are going for presumptive method. If it is less than 2 crores, if it is between 2 crores and 5 crores, prepare the balance sheet, prepare the P&L account, show it normally and disclose profit or loss. If it is more than 5 crores, definitely you have to show, you have to do the audit under section 44 AB and file 3CB and 3CD. When you are showing the 3CD, for the turnover purpose, you have to mention both positive and negative figure together. Whatever is the total turnover, the positives plus negative adding together, you have to consider and show under turnover in form 3CD is what I am trying to say. Any questions on derivatives is open. Any question on equity shares is open. I will take questions for 5 minutes and
sir,
we can.
Sir, the turnover will differ in 3CD from the ITR, because in the ITR you mean to show it under other operating revenues.
Correct.
That's only profits only.
Correct.
Okay, so the turnover figure will differ, right?
Definitely
Whether
differs.
it will not lead to scrutiny.
Prima facie, if system shows, then definitely it is selected for scrutiny. Okay. Otherwise, what is the best method do you see to be shown in P&L account?
Now, whatever we have shown as the under the income side, the P&L, same thing will be declared as turnover in the form number 3CD also.
Then the turnover what you are declaring in for 3CD will be wrong, because in P&L account credit side doesn't mean turnover. In P&L account credit side means only profits as per accountancy. But for the purpose of 3CD, turnover means turnover as provided in income tax. So income tax guidance note and clarification says the turnover for the purpose of derivative is total of negatives and positives in absolute numbers.
Sir, that is only deciding the whether 44AB is applicable or not, sir. We also told the same thing. That is only for the determining whether 44AB limit is applicable or not. Once that limit is checked, that turnover figure is nowhere is disclosed, nowhere is not required at all.
Yeah, okay. I definitely
Why
agree with you.
is the question of showing in 3CD? They will calculate gross profit and net profit, turnover, everything it will calculate.
Sir, in quantity, this comparative ratios in tax audit report, there you have to mention the turnover or gross receipts.
That's what sir is saying. That's what sir is saying. In that scenario, you show only the credit figures.
Only, sir. Credit figures only you want to show us. But if it is less than 1 crore, then why you went for 44AB? The section which you select the audit report will also go for a toss, right? 44AB.
Oh, if it is less than 1 crore.
Yeah.
Correct, yes. Sujit. You gave a good counter for it.
Yes.
Correct.
So
if the positives are less than 1 crore, and if we select this one, see, one more suggestion. What I would like to say,
sir, one suggestion I want to give here is, what we can do is we can take the turnover of 44 AB and show it under other operating revenues or a sale only. And in purchases, we can show the other number, any number, which get us to the loss. Means the turnover minus the profits or plus the losses. That figure we can show under purchases. So we will get the resultant. if we can do that, whether it
That is
can
one
be
option,
possible.
but what I would also like to say to you and as well as the Trivayur sir, see, P&L account and turnover cannot be straight away matched because there may be many other items which we have included in P&L account, which will not amount to turnover. So when the scrutiny is there, or when there is notice with the proper information, with the proper answer given to the reply given to the income tax department, there should not be any problem, is my view. Because I have handled several income tax cases in this matter. I myself have handled. So in none of these matters, I have these type of problems what you are asking. Because the information is very crystal. So even though the scrutiny comes, we can give a proper information and get away with any problem. Any questions? I will answer. When we entering the data in operating revenue column, it will certainly add it to the turnover column in 3CD. Okay, correct.
Only there are losses, sir. Only there are losses and no profit at all. In any contract, there is no profit. Everything is loss. In all contracts is incurred loss. Then nothing will be shown under the operating revenue or sale of services, sale of goods. Nothing will be.
Correct.
Yeah, then return is not taking, sir. The return is not accepting.
Yes, sir. Without operating revenue figure or a sale figure, if you are only showing under other expenses, it is not taking, sir. In Winman, that error will come.
Yes. What is the solution, sir? Sujit Jain, sir.
Sir, then we should not do it from Winman, because Winman software cannot decide the transaction. No, software is just an enabler. Software is not income tax.
Sir, that is, sir, if that situation, and if you want to use Winman, one proposal which I gave was you can take this whatever the loss figure as a purchase or other expense, and to get the resultant loss, you add it up and show it as other operating revenue. A fictitious
what
number.
We have to add it up?
Sir, maybe
10 rupees, sir. 10 rupees you can show in the operating.
1 rupee. Why 10 rupees? Show 1 rupee.
Okay, sir. 1 rupee, sir. 1 rupee. Show 1 rupee. Go ahead.
Yes, like that you can use, sir.
Yeah, that is a very this one. We can do that.
Sir, one more thing is, sir, in class this Winman filling up of auto classification of STCG and LTCG, this date of purchase and date of sale. Okay, for whether we can just give it as 1st April 2020 and 30th March 2021 for all the STCG
Yeah. If it for determining, if you don't have a proper data, and if you know that it is short term and if it is long term, you can do that.
Okay, that is one thing, sir, because what is happening.
Yeah, you can do that, Sujit. I have also done that in my.
Yes, in Zerodha, which you are showing, Zerodha, this guy is not giving the date of purchase of individual share. Total
I'm getting it now.
In tax P&L, he is not giving, sir. Tax P&L for equities, he is giving only the total quantity and the total sale value and total purchase value, but he is giving it as STCG and LTCG. That difference he is giving.
Okay, understood.
So hypothetical,
you can do that and classify it as short term or long term. For the purpose of that, you can do that. No problem.
I request all the members.
Final disclosure is same.
Yes, sir.
The resultant is same. You can do that.
And one more thing, sir. All members, I request you download soft copies, sir, from the broker's website. These will help you in doing this work crisply. If you take printouts and you feed it up all the time,
it will not help us.
It is taking a longer time. I have learned it the hard way. Use the soft copies, and even if you are filling up for shares, means you are showing it as inventory in the closing stock, or you are showing that as an investment, only write entries for the closing stock which is remaining with you. Okay, don't write for each and every buy and sell. So it will take a lot of time and it does not yield any value addition. Correct. That is my suggestion.
As far as the information is available, we can show.
Yes, yes. So this is will be very helpful, sir. That's why.
Yeah. But rather going for this method, if we have the information, I would suggest we provide all the information. Only in spite of lack of information or lack of time for filing the returns, we can resort to this. Otherwise, I would recommend we provide the complete data.
HDFC is providing, HDFC Securities is giving for each script, sir.
Right.
Kotak
Yes,
is
Sujit,
also
we will
giving.
not speak in detail about HDFC or Zerodha or ICAI Direct because it may take more time.
Okay, sir.
So any questions, because I want to close this session in another 2 minutes. I have a pre-meeting at 8:30. So any questions, if at all, if it is there, you can ask me immediately, or you can also call me and ask the question. I have displayed my phone number. I'll also disclose my email ID.
Sir, good evening, sir.
Very good evening, sir.
Sir, many shares are not getting delisted from this DMAT, or they are not openly marketable in the openly not saleable, sir, in the open market. What about those shares, sir?
Sir, you
we
can
claim
show
them
those
as
shares.
loss?
I did not get you. Sorry. Tell me once again.
Suppose I have bought some share very long back, sir, some 10 years, 15 years, 20 years back. Those companies were not at all there in the market now.
No, okay. It got delisted.
Delisted. Sir, I have some value for that cost purchase.
Sir, you can show it as long-term capital losses and carry forward the loss or set off against other income. If you have all the evidences to show that the company is listed and no more will get listed.
Evidences means how can we get them there?
You can get it in NSE website or BSE website, whether a particular company is delisted or whether company is dissolved. Like Kingfisher Airlines. In my own case, I had invested in Kingfisher, but the share got delisted. And I have absolutely no hope that the company will come back and I can sell the share. In that scenario, the loss that I have incurred from Kingfisher investment, I will show as long-term capital loss.
Okay.
It is erosion in the value of asset.
Sir, if the company.
What about date of sale? What you will put, sir?
Zero.
Some date. Okay.
Zero.
Okay.
Today's date or any last date of the assessment year.
Okay.
Sorry, previous year. Sir, I'll take a last question now, and kindly excuse me. I have a pre-scheduled meeting at 8:30. My email ID I will write. Sir, can I give my email ID, sir?
Yes, sir.
Otherwise, because I don't believe in sharing information in someone else's platform, it should amount to advertisement. But because all the fellow members are there, I don't consider this as an advertisement. It's only for the information I am sharing. If you have any questions, you can get back to me on this number.
Sir, not visible, sir.
Oh, not visible. Sorry.
The red color, so not visible.
I'll put it in white. So now?
Can you read,
Contact us at CABNH. This I is not there. This is not there. Contact us at CABNH. bnh.com. Thank you very much, sir, for all your patience. I also thank Ongole branch for giving me an opportunity to speak to hundreds of chartered accountants today and share my small knowledge with all of you. Thank you very much. I hope this 1.5 hours, 2 hours of your session had a good value and value addition in terms of taxation. If at all, if I have told anything wrong, if I have not spoken properly, kindly excuse me. I am a very small person in front of all of you, sir. Thank you.
Thank you, sir. Thank you very much. Now I request CA Chetan Reddy, Secretary of Ongole branch, to propose the vote of thanks.
Yes, sir. Good evening, one and all. Sir, am I audible, sir?
Yes, sir. Yes, sir.
Okay, so good evening, one and all. I'm Chetan Reddy, Secretary of Ongole branch, and I would like to present the vote of thanks on behalf of Ongole branch for this great CP seminar. First of all, we would like to thank our chief guest, CA K. Raghu sir, past president of ICAI. Fortunately, actually, we thought of sharing a pic who has been like, which has been taken at the inauguration ceremony of the Ongole branch. Actually, if I am not, with the permission of the MC, I'm sharing the picture taken during this inauguration of Ongole branch. So with the permission of Honorable MC and Chairman sir, I'm sharing the pic of Ongole branch wherein we can see the name of Raghu sir as the Vice President of ICAI during 2014. So we would like to grace that occasion once again. So we would like to thank the Chief Guest CA K. Raghu sir for gracing the occasion gratefully, and also we would like to thank special invitees today, special invitee CA Sujit Kumar Jain sir, the chairman of Nellore branch, and CA Arun Kumar Garu, secretary of Nellore branch, and also today's speaker Anil Bharadwaj sir, again from Karnataka, Bangalore. Sir, yours is a great presentation in the recent times, and we are very fortunate to have both the presenters, the chief guest and the speaker from Karnataka. We are very much privileged to have your presentation, that too on a burning topic of investments and shares and derivatives, sir. And the number of participants, it never came below 90. That shows how much patiently the listeners were attending to your seminar. So thank you one and all, and special thanks to the managing committee for arranging such a great seminar, and also for all the members who were part of this great seminar, sir. And thank you so much once again. Over to you, sir, moderator, sir.
Thank you, Chaitanya.
Now, Janagan Mana will be played by our treasurer Jagan Mohan Rao.
Janagana Mana Adinayaka Jaya He Bharat Bhagya Vidata Punjab Sindhu Gujarat Maratha Dravida Utkala Vanga Vindhya Himachala Yamuna Ganga Uchchala Jaladita Ranga Tava Subha Name Jage Tava Subha Sishamage Gahe Tava Jaya Gada Janagana Mangaladayaka Jaya He Bharata Bhagya Vidhata Jaya He Jaya He Jaya He Jaya 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 He Jai Hind Jai ICAI.